G'day everyone, Greg Canavan here for another market update. Today I want to talk about China. Over the weekend you may have heard the US and China have come to some sort of a agreement or ceasefire over the trade war, and that's leading to a rally in the markets today. The Aussie market's up quite strongly, and the gains are being led by the resources stocks, which is not surprising given their exposure to China. But what I want to show you in a few of the charts today is a reason to, I guess, remain cautious, given that the trade issues are just a bit of a ceasefire at the moment. There's still plenty to come, and we did see news on Friday. China's manufacturing sector has ceased to expand, so China is slowing down, and I think that was probably part of the reason why they were happy to come to an agreement with the US at the G20 in Argentina over the weekend. They know their economy is slowing down and they don't want to make it worse by escalating this trade war. All right, then let's have a look at a couple of the charts I want to show you. First up, we've got BHP billet. Now I always like to show you these charts purely because BHP and Rio are good proxies for China's growth and Australia's exposure to that growth. I've put up a longer term chart here, and I've drawn a line across the top, which is effectively the peaks in the share price for BHP over the past 5 years or so. And earlier this year, you can see that the BHP share price peaked at around $35, couldn't break out above that important resistance level, and has now started to turn down. So even though we're seeing resource stocks rally today, and probably will continue to do so this week, keep in mind that you're seeing pressure in the longer term on resources prices, and this to me is an indication that you've probably seen a peak in BHP's price for now, and could well be moving into a downtrend. So it looks to me like what we're seeing this week is just a short-term rally within potentially a longer-term downtrend. That's supported by, that's supported by Rio's share price, and as you can see, I've got that chart up there as well. Similar to BHP in that earlier this year, it couldn't beat those highs that it made earlier on this decade. In this case for Rio, it was 2010, 2011, which was a part of the iron ore boom back then. Since in the last couple of months, you've seen a really volatile share price for Rio, and often at important share market tops or topping out trading for companies like this, you see a lot of volatility. So my view is that you're seeing Rio's share price top out at the moment. Not necessarily saying it's going to go into a huge bear market or back down to the 2016 lows around $40, but I think you are going to see Rio go into a bear market as China continues to slow, and that'll impact Aussie resource prices. A combination of those two stocks, as well as obviously a lot of other resource companies. I've got a chart here of the ASX 200 resources index, and just recently that broke down below an important support level as well. If you can look at the moving averages there, which is the red and the blue line, they've recently crossed over, which is the first time they've crossed to the downside since back in 2015. Doesn't show up there in the chart, but so it does indicate that the momentum is starting to shift for commodity players now. So keep that in mind this week, when there's probably going to be a little bit of good news and a bit of a relief rally for the mining stocks and the resource sector in general. But as I said, I think that still caution is warranted. Now, to finish off today, I want to show you a quick chart of Bitcoin. I haven't showed this one, I don't think, before. I've put it a couple of times in some of the weekly or some of the daily e-letters that I do write. But I just wanted to show you this as being a perfect example of how a bubble deflates. You had a huge run up in 2017 to record highs, spent most of 2018 after a massive correction going sideways, a lot of hope that the Bitcoin price had bottomed, and then in the last couple of weeks it's just collapsed again. I've drawn a couple of lines there. The first one, $3,000. I think that's where you'll next see a bit of support for Bitcoin. That might hold there for a couple of months or for even longer, but I think the end target here for Bitcoin is roughly back down to near where it started, which was $1,000. And effectively, this is how all bubbles deflate. So look, it's just an important lesson in not getting too carried away with bullish sentiment and optimism, and it's always important to focus on stocks that have earnings and have fundamental drivers. Not saying that Bitcoin isn't a useful asset, but at $20,000 or even $10,000 or $5,000, quite clearly there was a lot of hope and optimism priced in. Anyway, that's it for this week. I'll catch you again next week. Thank you. Thanks for listening, and be sure to click on the link below to subscribe for more market updates.